Hello everyone, we are doing the Sunday Fast Fire video, which is basically a strategy session on the micro level, stock by stock, that you guys ask for. They're about 90 today. And I will always start with the indices. So we're looking at the S&P on the SPY. And what's there to say? We had a correction, and it was about 6 or 7%, depends on where you count from. And then we had a reaction, and then an overrated reaction. So they not only recovered, but then exploded. Now, believe it or not, this is where the fun starts. So I don't like when we rally this fast, but I'm not going to short it just because I don't like it. That's for starters. Look back to this area here. I will have another video, by the way, this evening, with more detail. The point of this is that we are now approaching another breakout level. In real life, we should slow down, chop, maybe dip, come back and take it out if we want to, but it's there. So be aware of it, that the S&P is fighting against the September levels, and then there's the summer levels. The Qs is already up here. The QQQ is already up at the summer level. Now, this is the exact same situation we had before May. Before May, we had a period of time where the QQQ was already busted out from the February resistance back then, and the S&P was shy about doing that. And then what happened? NVIDIA reported, and then NVIDIA exploded 30% and took the whole market with it, and we had this whole breakout. I call the NVIDIA breakout from May. We have NVIDIA earnings this week. So can it repeat? Will NVIDIA also promise the moon? We shall see. And if so, we will probably, if they break out from here, we will probably hit or test the all-time high. Now, this is 3 steps forward. But I'm saying this so people don't short just because they hate it. And chasing after a big rally is also crazy. So look out for that video. All right, let's jump into today's tickers. And they are as such. First things first, Apple. These are alphabetically sorted, and I'll break them up into 3 different videos, about 26 or 27 or 28 videos each usually. All right, so Apple. Everything I'm going to say is, it's not an obvious entry opportunity because everything almost looks like this, a giant rally for Apple going into a prior fail. So all I have to do is just extend that to here and mark the high from last week as the one to beat, which was almost 191. And look left, that high closed the gap back to August perfectly. I mean, like perfectly. Look at it, that high candle. Look, they closed the gap. It doesn't mean they fall apart. It just means they achieve one objective. The rally has been huge, so be careful shorting it. It rallied 15% roughly. So a small dip is a buying opportunity. Why? It broke out from 181, 182. So if it falls back to 185, stalls, falls back to 181 or 182, people are going to say, oh, let's get out of Apple. And that's when you should get into Apple. So if you're waiting for a dip, you have 2 spots, depends on the speed. 185, give or take 50 cents. 182, give or take 90 cents or $1. So that's Apple. ABBV, I don't usually trade it. It's if you're an investor, it's an okay place to be long, to start longs. I wouldn't add longs if I had some already. If they lose 135, just under 136, the target of that drop could be one that launches another bearish pattern. It's not the obvious thing to think that will happen, but it's there. So I don't know these companies. They are prone to headlines. So biotech and healthcare. And so you have an immediate must hold, and it's a good base for a rally back to 144, 145. But you should know your risk below. Adobe, most definitely an ending point, not a starting point. If I'm long, I hit my targets and then some. There is no way on planet Earth I would join a company after rallying that much. If you waited to now to think that it's a good place to get long, I would challenge you to revisit the way you invest. The human instinct is to chase up here because now it's up in the moon and everybody's talking about it. And that's when the prior buyers up in this area lost their money. So This is like what perfect CNBC watcher would do. Oh, okay, this looks good. Let's go. It doesn't. This, if you're not long Adobe already and you're starting longs here, you better have a long time horizon, because not that it's going to fall, it might, and it's easier to fall than to rally. There is a breakout if you're a momentum trader, but that's a different conversation. 564 is a breakout. The best place for me personally to go long is into 500 against these. And even then, that's a little ginger. Personally, for me, if I were to trade Adobe, I would do it down here from an investment perspective, 470 or lower. We can sell credit put spreads on it, but that's different. All right, so this is Adobe. Good company, good P&L, look at it, solid as a rock. It's just a matter of timing. Archer Daniels, for me, I would think it dips to 72.5. And if it doesn't, then if it takes out 75.50, it could get to 78. So I'm giving you trading comments. A small dip to curl back up and come up, or if it comes up and takes that little jaunt out right there, it could get to 78 pretty quickly. There's not a lot of transactions up here. First things first, you have to get out of this and that. I'm not looking at earnings. That's on you. So this is a company that a lot of the members love, and we drew downside scenarios. It took that and then some. My issue with it is that they lost 29 too easily, and it's going to take a lot to recover it. If you're an investor for the long term, this P&L looks investable. So do your homework. If I'm long already, I wouldn't add. I'm invested. If I'm not long and I consider betting on the company's future, I would take half a position at most. I wouldn't add the second half until I get clarity. Okay. ALB, they're selling rallies. Look at it. Rally sold, rally sold. There's a rally. Will they sell it at 135? I would not get long going into 135 to 140. I think there are sellers there. I put this before as a possible scenario, and it played out. Rally sold. So what if it plays out again? Some sort of a rally gets sold. Okay, so we'll change the color of this one to know we did them on different time frames. Nope. Okay, so this is not like scientific. I'm just showing you what could happen. Okay, the P&L is okay. The bottom line is just too flexible for my taste. You know, making no money, boom, things are great, and then what? All right. Make sure it's not temporary. Applied Materials, you saw the trade in Applied Materials. It was a catch to the knife for sure. Up here, it's not for me. So they fell apart from a breakout. They gave back half the rally, just about, almost exactly half. So the thing was to catch the falling knife, and now it's recovered half of that. I wouldn't do anything. If I had owned it for an investment, I wouldn't have bailed on it when it fell, and I wouldn't add to it now either. So the trade went away. The investment, that's on you. It's a solid P&L. Look at this P&L. Wow, look at this thing. Did they have a split or something? Why is my arrow completely wacky? Anyway, good move. Oh, I know why. I moved it left to get it out of the way. Anyway, so let's leave it there. There's nothing to do from a trading perspective. AMD. Okay, given that NVIDIA reports next week, I wouldn't touch AMD. Now, it will follow NVIDIA. How closely, I don't know. Up or down, I don't know. So if AMD is rallying, the S&P is rallying, I would rather trade AMD through the S&P if I have to. Because if AMD is falling, the S&P is falling, but not as fast and not as drastic. So personally, I would not trade AMD because you're gambling over the outcome of NVIDIA. From a charting perspective, this here is not an obvious entry point. This stock went into prior fail and a prior fail above that. Now those make good catalysts, but probably makes sense for a dip. Come back and take that out. I'm impressed with how they recovered 108. Okay, it's pretty impressive. Arista not work. The price action was exactly as predicted. And how did we predict it? We copied prior price action, and look how it happened. I mean, you can't paint it any closer before it happens than this. So I just copied it and pasted it forward. So let's say this happens, and it kind of did. So what are we doing here? I would wait for a dip. Up here is not for me. Buy the next dip in ANET, which we've done before. Up here is not an obvious entry point. So look at the P&L. I mean, it looks fake. It's so perfect. So if you're an investor owning it for the long term, then you don't need to watch the chart. Just hold it. If the markets are higher in the future, Arista would be higher in the future. BABA, I wouldn't touch it just because I don't know much about China's stock market. I don't know what the Chinese government has in place for Chinese companies. So this on paper is a bulletproof company, but look at it. Trading like it's going out of business. Also, the reaction to earnings was too harsh past prior support levels. If they lose this, they already lost the most recent support. If they lose the one where they're at, they can probably come down to 72 or maybe even 69. How? In a series of lower lows and lower highs. So one could argue that this price action might repeat itself like it did here. I'm speculating that they're going to sell the next rally, and it's probably going to look something like this. Oh, look at this. You see how that shape repeats? So be aware of it. If you get a rally, I would trade it, not invest in it. BITO, I'm in it. I'm looking to lighten up a little bit. I said I would close some of my BITO when Bitcoin gets to 42 to 45. Well, it's pretty darn close. This week, if BITO takes out last week's high, it will get to 20.5 to 21. I would offload some because I have a lot of crypto as well, which is up massively. So it's either get rid of some BITO or get rid of some crypto. I think I'm going to do the combination of a little bit of this and a little bit of that and take out my initial investment. But I do like it. They may pay a dividend this month. We will find out on 12/5, I believe. The next this dividend should be big. Last one I expected it to be big. I don't know why it wasn't. It was only 15 cents. It's still huge compared to that stock price, but I expected it more. So we'll see. Booking. This is the old price line. Not an obvious entry point up here. I think maybe closer to 2875, below 2100, inside this box. That was the earnings candle. Let's say they come and challenge it. 2950 or lower becomes interesting from a trading perspective. Okay, they avoided the nasty downside scenario and they went to the moon. It's a big stock. Not everybody can trade it. Using options, be careful. It's a manipulated stock. You will lose to the market makers. Close your bets early. Okay, Blackstone back in the middle. So it fell from point A to point B, back in the middle. It's kind of satisfied a couple of steps of this harmonic, which wasn't very accurate. So I would assume this is it. This here is not an obvious starting point. I think it goes to 98 before it goes to 110. It's easier to get to 98 or 99 before it goes to 110. Short-term comments, nothing to do with their fundamentals. By the way, that played out, that green arrow, and then some. So I'm going to move it out of the way, not to confuse people. They overshot to the downside. Caterpillar, good bounce, not an obvious entry point. You see the August pivot line? Yeah, I think we caught the dip with selling a put spread on the dip. We thought that these two arrows will come to fruition. They went way past them and then they came back to them. So the August pivot is in play, and it's the zone up to 260, I think. The closer to 260 it is, the less likely I would like to start longs, because here's a stock that did all of this work on top and then fell below that line. When they come back to the line, they're going to find the same sellers that sold it here. CCJ, definitely not a starting point. Wow, look at that chart. Holy macro. So why is the chart looking so awesome when the P&L is not? How does that work out? On what planet Earth? Don't you feel stupid chasing it? I would if I started up here and then it gets shellacked down to 39. Why? Why is it rallying like this with this kind of P&L? I understand profitability and all of that, but when your sales are falling apart or not looking up, why is your stock price looking up? Questions you need to answer. So I'm infusing a little bit of doubt. This thing sells almost 12 times its sales. That's 6 times more expensive than Amazon. Probably 4 times more expensive than Apple. I don't know what they do. Let's see. Provisions of uranium. Okay, so it's all hype, folks. When the hype ends, this thing is going to come back to earth, or it has to improve its P&L. So if you're investing for uranium for like 10 years from now, that's a different thing. But if you're trying to get into a stock at a good level, if this was Microsoft and you're trying to get into a good level, I mean, I don't get it, but I wouldn't short it. CHWY finally getting some respect. I'm not involved with this stock anymore. Opportunity above 2160. Above this prior fail, probably gets to 24. Dips into 19 or 19 and a half should be solid opportunities because they fell below that in a bad way. They came back above that and jumped on top of it in a perfect way. So we had an opportunity pegged here with 3 levels of resistance, and they are perfect. If I extend them that way, that's where we are. If I extend it this way, that's where they failed. And this one is where they based the last. So we have a box we're working with. So I wouldn't short CHWY 17 days until its next earnings. Okay, I don't know what that is. Coin, yield max, what is this? Coinbase, oh my gosh, okay. I don't know what this is. I think it tracks the price of coin and it pays in incomes. It's like BITO for coin. Yeah, you wouldn't catch me trading that. From a trading perspective, you're in a breakout. Enjoy it. I have no reference points. If you're actually, I personally, this chart, if it's a company I believe in, I would get long under 21 when it falls into this area right there. This is rallying with Bitcoin. And I told you I'm going to be offloading some Bitcoin. CRM, not an obvious starting point. Into 225, 226, I think it dips back to 210, 215. That would make a better entry. Seller zone now becomes a support zone down here. Let's see, earnings in 11 days. So you have that wild card. Good company, nothing against it. They're selling rallies. Huge rally sold, huge rally sold, huge rally sold. I don't know. Strong buyers from 212 or lower, volume-wise. Don't take my word for it. That's where they love it. CrowdStrike. Oh boy, did we get this one right. How many times? We bought the dip in that thing so many times. Look at how well it respects the prior action. Look at this green one, how we did that. It was perfect in hindsight. So here, it's not for me. This is where it gets into the stratosphere. I wouldn't short it, but if I were to get involved with it, how about it? Buy the next dip. Buy the next dip. So let's say you're here. To come to here. Okay, the green worked out beautifully. The red worked out beautifully. So let's just see if the white works out beautifully. I hope this visual gives you better than my words. Okay, so we made money on this indirectly. I've been saying these guys, you should sell the rips, don't go long, and I've been right on it. And then finally last week I said let's go along the XLE. which in reality is going along Chevron and Exxon, because Chevron and Exxon are 40, above 40% of the XLE. And then the next day the thing exploded higher, and then I'm out. So they're selling rallies. This is a rally. I would not start longs here. If this rally got me out even, I would have ditched this stock and moved on. Some people buy it for the income, the dividend. Okay, of course, don't trade that. But from a trading perspective, this is not an obvious entry. I think 147 is a selling zone. Let's see how close we can get there before it gets sold down again. Disney, most definitely not an obvious entry point here. Look left, people. Look left. Okay, it broke out. The target of the breakout was $7.50, and this is more than the target. What target? This inverse whatever, the neckline breakout out of 86. And now we have a bearish pattern that hasn't started yet, and it's late. So I think I would buy the next dip in Disney, something like this maybe. I think Disney might do this week. Pop a little bit more, cover half this gap. I think this line is totally correct. Okay, so that's me on Disney. Devon looks like it wants to base. So if you're an investor in Devon for the long term, that's fine. You better not lose the low from last week, because I think if you lose the low from last week, which is 43 something, 43.4, I think you will be in danger of losing 42.6, which will take you down to the low 40s, if not high 30s. I don't think that's the forecast. I mean, the P&L is okay. It's not awesome, but it's okay. The company is well managed for a long time, I think. So you are in a base. It's a support zone. It's an okay starting point. I wouldn't add if I'm long. I wouldn't pile in. And 47 is a resistance line. So any dips would be better. But that would be actually trading it versus investing. ENPH, I'm done for. I'm done with it for a while. I mean, we won, but boy, was it tough. I don't know what they plan on this industry. I'm really skeptical about it. They have all the tailwinds they need, and they can't make it work. So, opportunity for a breakout. I don't know, 199, 100. And maybe you get to 112. This used to be the support. Now it's going to be a resistance. It might be relatively easy to get to that area if they can just take out 101 or 102 and then get there and then hit a big wall. Look at the volume. They will hit huge volume. So selling puts maybe on bad days, but the VIX is pretty low and there's not a lot of anxiety in the stock right now. EQT. Oh, who is this? Natural gas. What is going on? Am I seeing this right? Their income now is like 1/4 of what it was 5 quarters ago. What are we doing here, people? Yeah, this is not for me on an investment basis. Technically, you're in a base, but I bet you if the P&L doesn't turn around, I don't know what this is. If the P&L doesn't change and this one loses 38.50, it probably goes to 32. Yeah, I don't know what this is. If it pays a dividend, oh boy. It does pay. How can they pay a dividend when the sales and profits are like this? Oof. Be careful. Do your homework, folks. Now I'm commented on chart and commented on what is this going on. Make sure you understand what's going on here. Another one, energy transfer partner. So technically speaking, this is not a starting point. It has had multiple failures. And to me, if you split this in half, this is about half of it. These circles, I drew them there for a reason. They're battle zones and we're in one. So buy the dip into this higher low to come back and curl maybe. maybe you do this. So another one of these. You're here, maybe you do one of these. That doesn't look so good. It looks a little deeper than it should be, so whoops. My curve looks more likely. Like this. Etsy, okay, so if you sold a put or a put spread and got in trouble because of my trade, you're definitely out. But this one gave us an out, just in case somebody got assigned. There's no way I'm going long the stock. First of all, it fell too much, unexplained, and now it's rallied too fast into a big problem area. From here to 76 is a technically problematic area. From a trading perspective, I wouldn't do anything with it. If I have greens, I would be out. Okay, opportunity. If you take out last week's high, you might get to 76. But to me, risk reward, there's more risk than there is reward from here. So I would be out. Look left. Huge battle. Hey, I'm consistent. Sellers. All right, so we finished video 1. Let's stop it and hit the video 2.